We are back now with breaking news. The December inflation report just out this morning.
The latest consumer price index report shows inflation is down 0.1% versus the month of November and an increase of 6.5% year over year. So to break down these numbers, we're joined by NBC News business and data reporter Brian Cheung, and we're also joined by Investopedia editor-in-chief Caleb Silver, our inflation dream team here to help us break down the numbers. Brian, let's start with you. What sticks out about the report? Any signs of relief in specific categories?
Yeah, well, as you mentioned, the big number that we got just about 15 minutes ago was 6.5%. That's how much prices increased between December of last year and December of the year prior. That is a slowdown from the 7.1% we had seen in the month of November, again, comparing year over year. So that's November to November of the prior year. Some current, encouraging signs on the price pressures. Now, where exactly did we see inflation in the month? If we're taking a look at categories, these are the November to October numbers. I'm looking at the November to December numbers. Now, when we're looking at shelter, this is the catch-all for rent and also equivalent mortgage payments. That went up by 0.8%, so that is increasing. But food increasing at a slower rate, that only rising by 0.3%. And then gasoline, we saw some encouraging signs with gas prices at the pump going down, actually declining by, get this, 9.4% just over the month. So a lot changing in that inflation report that we got just a few minutes ago.
Caleb, let's bring you in the conversation. So what's your reaction to the new data out this morning? Any surprises?
Yeah, data as expected. It is gasoline that's bringing the overall inflation number down, but you still have those high food prices and you still have those high shelter prices. A lot of that due to the fact that shelter and a lot of folks moving into the rental market because interest rates are so high to mortgage a home. So inflation's still sticky, but it's coming down. That's 0.1% increase, lowest increase we've seen since October of 2020. So it's working. Inflation's coming down just slowly.
Brian, you gave us some comparisons already, but just, how does this report compare to those from the last several months where we've continued to see inflation, rise year over year? Overall, is inflation cooling or heating back up right now? How do we define it?
Yeah, well, again, at 6.5%, that's a pretty far fall from where we saw 9% in the summer last year. Again, talking about yearly rates here. So we saw it go from 9 to 8 to 7 to now 6.5. The Federal Reserve, though, would really like to see that somewhere closer to 2%, but we're seeing signs. Food, yes, it's still going up. Again, going up by 0.3%. My handwriting is not that great here. But one other point that I want to point out that's not on this list is new cars. New car sales have continued to go up over the course of 2022. For the first time in a number of months, we actually saw new car prices fall over the month. So it's maybe some encouraging signs for people trying to buy a new car sometime soon.
All right. And Caleb, for the home buyers out there, we've seen a recent dip in mortgage rates for those looking to buy a new home. Rates are still more than double than what they were a year ago, and they hover just over 3%. Could this first CPI report of the year be seen as an indicator for the real estate market as a whole?
Yeah, and you got to look. We've had declining sales month after month throughout 2022. Building permits and housing sales fell every month. They're probably going to fall again. Home prices finally started to crack. We got a report this week that showed they're down about 10% across the biggest 20 cities in America. So those high mortgage rates are keeping people out of buying in the housing market, and we'll probably see those mortgage rates come down a little bit, but I wouldn't expect anything like 4 or 5% anytime soon.
Brian, we are keeping an eye on these numbers, but perhaps no one is watching them closer than the Federal Reserve, which is set to meet at the end of January. How might they react to this?
Yeah, they'll meet January 31st, and they'll have the policy decision on February 1st. And the expectation is they'll continue to raise interest rates, which will keep mortgage rates high, as Caleb was just saying. But maybe they raise interest rates by a smaller increment than they've been doing in the last few meetings through much of 2022. They were going by these outsized 0.75 percentage point increases in each meeting. They lowered that to about 0.5 percentage point in their last meeting in December. The odds now that markets are pricing in, they'll do a 0.25 percentage point increase in that February 1 meeting. We'll have to see.
Yeah, and Caleb, going back to you, where do we go from here when it comes to the potential future interest rate increases? Should we expect some easing from the Fed?
Yeah, absolutely. As Brian said, probably going to be 0.25%. Brian and I like to look at the Fed fund futures and see where traders are betting. It's going to be 0.25% probably at the end of the month, February 1st, and then maybe another 0.25% in March sometime. We'll see what happens with the inflation numbers.
All right, Brian and Caleb, thank you for helping us break it down this morning. We appreciate it.